I'm going to walk you through the investment strategy I teach to the students that I mentor and that I actively use myself. When you customize it for yourself, you'll know exactly where you should invest your money first, second, third. It'll all be mapped out for you. I'll walk you through the entire 7-step process coming up. Hey there, my name is Stephen Spicer and it's my goal to help you invest smarter. And one of the questions I get asked about more than anything else is where to invest first. So I knew I needed to make public this step-by-step investment strategy guide that I created a while back for my students. I actually tried putting it into an Instagram post last week. I worked on it for more than 3 hours and I still wasn't super happy with it, but I wanted to get this value out there. I think it did help some people, so that's good. I hope to nail that visual representation down at some point in the future, but for now, I felt a video would be the best means for me to communicate this strategy with you. Now, before we get into the 7 steps, let me lay out a couple rules that go along with this strategy. You're allowed to skip some of the steps and move on to the next one. Not skip around, but seriously think about whether it applies to you right now or ever, or whether or not you've already done all that you can do in that area. And if so, to move on to the next one. Now, this is true for most of them. I'd say numbers 1 and maybe 4 are required, but the rest you can customize in that way. And the other rule to keep in mind is that this process should be repeated. Whenever you have a chunk of money that you'd like to invest, you should start with number 1 and move down the list until you determine the next place that you need to invest. So let's not waste any more time. Let's get into it. Now, these first 2 steps revolve around the idea of investing in yourself. I know that can seem boring sometimes or might even feel like a waste of time, but it's not. Investing in yourself is one of the best things that you can do with your money. So here we go. Step 1, invest in your financial education.
Well, guys, welcome into the Financial Education Channel.
No, not that financial education. If you don't have a solid financial foundation, nothing else matters. When the inevitable chaos of life hits, whether in a month or in a decade, if you haven't invested any time or money here, you could lose it all. And these days, lessons in basic financial education are desperately needed. We as a society are more deficient than ever before. We have more debt, we're saving less and less, we constantly waste and effectively lose our money. It's not hard and definitely not expensive to learn the essentials of paying down debt, contributing to your 401k, at least getting the match, budgeting, and the like. There are a ton of free resources out there, and if you need any help, just reach out to me personally. But for me, I try to only contribute to the financial basics conversation when I have something unique to offer. There's enough general information available already. For example, when I noticed flaws with the advice everyone gives you about your emergency fund, well, I had to do something about that. I had to help, so I made a video about it, bringing those flaws to light and helping you overcome them, or at least identify them, be aware of them. The investment here is probably more one of time than money. That doesn't mean that you can skip this step. Go ahead and put your money in 4 or 7 and just make a note to tackle this one later. No, until you invest your time here, I don't think you should move on to any of the following steps. Honestly, that can be a recipe for disaster. Don't put your financial education on the back burner. I'm sorry, I know it's not super exciting. You know, when someone asks, hey, where should I invest first? And I'm sure they roll their eyes whenever this is the answer. But it's imperative for your long-term investment success. That's why I make sure all my mentees have a plan in place here before we proceed. So I hope before you move on, that you have the basics, debt, budget, etc., taken care of, and that you have a good, solid financial understanding, financial knowledge. Assuming that's the case, let's continue. Step 2, invest in your skills. Basically, if there's a way for you to spend some money or time to make yourself more qualified and thus ultimately make more money, you should do that. That could mean paying money for a course to help you pass a test that will give you a certain certification that will qualify you for a raise at work. It could mean going back to school for a higher degree, but personally, I'd only do that if you know it'll result in making more money, enough to justify the significant time and expense. It could also mean learning the skills online to start that side business that you've always dreamed about. That'll take an investment of time and money. And again, it doesn't have to be money here. It could also mean investing the time to teach yourself through YouTube videos or some other free resource how to do something that can make you some money on the side or could serve as a supplemental skill on your resume to ultimately improve your marketability, something that will make you more money. Since everyone is different, you'll have to customize this to you. But I bet almost everyone could do something in this step to improve their skills, even if it's something that I've failed to mention here. The formula for this is simple. You invest time and maybe some money into something that ultimately, ideally in the near future, will result in you bringing in even more money to invest. And then that money, of course, can be run through this process, this investment strategy. Now, when you find yourself on this step unable to come up with anything you can do or want to do to improve your skills, or you're currently in the middle of doing just that and you're strapped for time but still have more money to invest, great problem to have, then let's check out step 3. Invest in what you know. In an interview he did with the Wall Street Journal, Mark Cuban shared his story and how he made his money. It revolved around him only making investments when he knew something specific, and he knew that others, the thousands of other people also trying to make money investing, wouldn't know as well as him. He talks about investing in what you know. If you have a unique knowledge, you'll be better served using that to your advantage than simply diversifying your investment portfolio across various mainstream investments. This could mean investing in the market, specifically in your area of competence, like if you work in pharmaceuticals and thus have a unique perspective and insight that the horde of investment researchers and analysts have not yet picked up on, you could use that to your advantage. In what areas are you uniquely knowledgeable? Where might you have an edge over that research horde? But I think more commonly this step is for entrepreneurs and business owners. Think about it. You shouldn't start your business until you have a sound understanding and handle on your personal financial situation, step 1. And you'd be best served by investing time and money in honing your skills as much as possible before you start pouring that time and money into your actual business, step 2, right? You see how this all fits in there? And yeah, if you're an entrepreneur, at least for a long time, this is where you'll likely stop your investment journey. Your money will keep getting invested into this step, and maybe step 2 also for your professional development. I had an entrepreneur friend who owned a chiropractic office. He kept pumping more and more money into his business, making it grow, but he felt guilty that he wasn't investing very much into his traditional accounts, the accounts that everyone tells him he should be having, his brokerage accounts. Almost all of it was going into expanding his chiro empire. So I walked him through this investment strategy and showed him that because he was uniquely qualified to profit from that particular entrepreneurial endeavor, that it made sense for that to be where most of his investment dollars were allocated. I helped him calculate the potential return on investment of his business and compared that to its risks. And that risk-reward profile that we were left with made it clear that this was a much better investment opportunity by far than anything else he'd be able to do. And that's what it comes down to. When you're comparing one stock to another, for example, which one has the best risk-reward profile? When you're comparing a different business opportunity to stock investing in general, again, where is the better risk-reward for you? And if that's in the business that you're pursuing, I don't think you should feel guilty about most of your investment dollars going there. Real estate would go here as well. If you have a good grasp on real estate investments or a unique understanding of rentals in some specific market, then putting that knowledge and expertise to work for you here on this step may be better for you long-term than other options. If you don't understand real estate as an investment but have an interest, then maybe you just uncovered a skill that you could invest some time and money into. Remember step 2. On the other hand, if you don't understand real estate or entrepreneurship and you don't have any interest, then move on. Don't try it. You don't have to. So you've made it through the first 3. You still have some money left over, or you just didn't find anywhere else that you felt you should invest right now, then let's start thoughtfully building out that traditional investment portfolio with these next 3 steps. Step 4, invest in the market strategically. I'm talking about a strategic asset allocation. That's referring to the mix of assets you hold in your investment portfolio. Traditionally, you might think of the 60-40 stock and bond only portfolio. You know, the one that all the experts and investment authorities, including many here on YouTube, mindlessly point to as the obvious and only way to responsibly invest. Yeah, that one. I clearly, strongly dislike that portfolio, but that is, at its most basic level, a strategic asset allocation. I don't think that's enough. You can do more. You should do more to protect and grow your life savings better. I'll share with you briefly what I'm talking about here, and I hope this doesn't sound like a cop-out, but if I tried to fully explain everything I believe about how you should build out your basic strategic asset allocation, it'd turn into a short movie. And actually, I did write down all of that, and in fact, it did turn into a book. This little mini book details the reasons that I believe the traditional stock and bond advice is potentially ruinous, and it highlights a few specific ideas that you could use to improve your own strategic asset allocation. Now, if you'd like a copy, check the description for links. You could get one from me, from Amazon, or you can download the audiobook version for free. That is until my publisher makes me take that down, likely later this year. The gist of my approach to strategic asset allocation is to incorporate additional uncorrelated assets beyond just stocks and bonds. I'm talking about including real estate investment trusts, market neutral funds, long-short equity funds, like Greenblatt's perhaps, and maybe even some managed futures funds. And if some or all of that is new or foreign to you, I apologize. We'll get into all of it over time, but since you probably don't want to sit here long enough for me to just read you my book, which goes through all of that in detail, we should move on. I at least hope that I've piqued your interest in finding a better way to build out the base of your investment portfolio, because that better way exists. And maybe you think of this as part of your financial education. You know, step 1, invest some time and money into finding and understanding that better way. I'll do my best to help you with that over time. Okay, let's move on. So you have your strategic asset allocation. Now it's time for step 5, invest in the market tactically. Now, we're talking here about a tactical asset allocation. A case could be made for lumping this in with the last step because it's not really a new place for you to invest money. It's more so a way to improve the strategic investments that you already have. But I recommend it only come after you're comfortable with your strategic build out, step 4. So that's why I separated it and made it its own step. Again, this is a large subject in and of itself, one where we could create an entire course dedicated to helping you understand various tactical strategies with their respective nuances, maybe someday in the future. But that's not really the goal of this video. I'll tell you what, I'll give you a couple examples, and if they sound like something you'd like to learn more about, 1, be sure to let me know in the comments, and 2, you may have just found a new skill worthy of your time and money, so hopping back to step 2 might make sense here. Here are those examples. A tactical asset allocation could mean shifting the focus of your investments in different industries based on the overarching market cycle. Some industries perform better during bull markets, others during bears, and others still when the market is relatively sideways. If you know what to watch for, the signs of each of these stages within a cycle, you could adjust your portfolio accordingly. Another example of tactical asset allocation is paying attention to different markets' relative values. So like how the value of small companies compares to the value of large companies. Over time, the relationship between the two different types of assets changes. And if you pay enough attention and know what to watch for, as one becomes overvalued compared to the other, you could adjust your personal portfolio accordingly. Both of these strategies, as with all tactical strategies, attempt to better protect your portfolio as well as position it for greater long-term gains. Once you have your tactical asset allocation strategy in place, or you just have no interest whatsoever in figuring that out, which is totally fine, then you're ready to move on to step 6, invest in individual companies. Now this is the one that gets the most attention. It's probably the one that comes to mind when you hear the word investing. But notice it's number 6 of 7. In my opinion, before you really start investing heavily into individual companies and spending the time necessary to do so profitably, you need the solid foundation in place that will come from working through the earlier steps. And I do this too. I get more excited about this step than any other. I will probably spend more of my time on this channel talking about investments into individual companies, how to invest, where to find the best opportunities, my specific research-backed stock ideas, and so on. If you're interested in that type of information, then you should definitely click the subscribe button right now and click the notification bell so that you don't miss any of it. It's exciting stuff. There's a lot of opportunity out there, and there's a lot to talk about. There's also a lot of bad information available out there. So it's important to me to help you learn how to avoid the pitfalls that ensnare so many investors. As an example of one of the videos I put out there to help you find stocks, I created one a while back explaining where I find my best individual stock investments. And it explains where you can find stocks with 100% plus upside potential and a little downside risk. So you might want to check that out if you're interested. Okay, so you have some individual stock investments working for you now. That's cool. What could possibly be next? I mean, you could spend all the rest of your time and money here and still never learn everything there is to learn and consistently find new amazing opportunities with hard work, of course, and some solid research and analysis. But some people like to venture a little bit further with their investment strategy. And that's okay, as long as you have the solid foundation that comes from steps 1 through 6, or at the very least, steps 1 through 4. I'm talking about people who are interested in speculation. That's step 7, speculate. I created a video on the difference between investing and speculating last year. And sadly, most people don't understand that difference. As a heated example, and I'm ready for the backlash in the comments, a lot of people think they're investing in cryptocurrency when in reality they're speculating at best. Most are just gambling. I explain what I mean in that video, so I hope you'll watch that before you get angry with me in the comments. Here's my point with this step. I'm not so much recommending that you speculate, I'm just giving you permission to once you've reached this point. If there's some stock that you can't really seem to find a good way to assess its value, but you just have a good feeling about its future, this would be the place to pick up some shares. Or maybe it is cryptocurrency for you, or perhaps a plot of speculative land, or even something as silly as Thai beanie babies from McDonald's Happy Meals. Yeah, I'm still waiting on that one to pan out for me. It's just really important that you recognize speculation for what it is and put it in its place in your personal investment strategy. That is, after everything else is already taken care of. So there you go. My 7-step investment strategy that you can use and customize for yourself. Invest in your financial education. Invest in your skills. Invest in what you know. Invest in the market strategically and then tactically. Invest in individual companies. And finally, once you've done all of that, you can speculate a little. I hope this method of thinking about your investments helps you invest smarter as much as it's helped me and my students over the years. I hope by now you're already subscribed, but if not, and you want to continue on this path, don't forget to click that red button and then the notification bell. If you're still with me, please give this video a like if you found it helpful, share it with your friends and loved ones, and leave me a comment below, even if it's just to say hi. I can't wait to see you there, and then again in the next video. I sincerely do wish you all the best. Take care.